So you are bullish.
Good morning.
I am bullish.
How bullish?
I think the S&P should rally 5 to 10% in the next 30 days. I stand by the 2850 price target that we've had on the S&P all year. If this sounds unreasonable to you, think back to January. A lot can happen in a month, and a lot of things are beginning to go in the right direction. I've always seen the situation with Huawei CFO as an issue of Iranian sanctions separate from trade, but making bail, being comfortable in Vancouver, it shows that that can go through its own process with due time. And now we really do see that there were some meaningful agreements that are being shaped and coming out after the G20 meeting. And the president can go easier on Chair Powell. Markets have spoken. The Fed is a lot closer to neutral. And in my view, people are making a big fuss about the shape of the curve. My view is these interest rates suggest the PE should be closer to 20, not the 15 that we're trading at.
So is this a tactical call? Do you fade into 2,800? What happens then?
I wouldn't do that. I believe that we're setting ourselves up for a really good year in 2019 to kind of deliver the returns that should have been delivered in 2018. And we still very much believe that there's a recession nowhere in sight, and that the S&P is capable of doing mid-single-digit earnings growth for a few more years, 2% dividend yield. And from these levels, yes, there is PE upside because there's little upside on interest rates from here.
So you're not bothered by the fact that 1% rallies in the S&P 500 just disappear based on headlines and tweets and rumors and photo ops on trade?
It's bothersome. The intraday volatility has been very annoying and trying to keep pace with all the incoming news. But we're trying to get back to the basics of what are earnings, what are interest rates.
The market doesn't appear to be focusing on the basics.
It will be before you know it. You look back in a few months from now, and a lot of these issues will have gone away, but the earnings and interest rates in this ballpark will still be the case.
All right, Laura, we talk about themes for 19. What are the big ones for you?
Sure. So going into 2019, I would say we're also bullish. We are overweight global equities, and overall, we think that a lot of the investor reaction to volatility has been overdone. And I would attribute this to two reasons. One, investors got very complacent with a low volatility environment. If you look back at 2017, the VIX, which is a measure of implied volatility, only went above its long-term average of around 20, about 0 times. So coming into a year in 2018 where we see a pickup in volatility, investors are very sensitive to any noise around the key risks that have been on their minds, whether it's US and China trade tensions or what the Fed's going to do or global growth. The second thing I would say is that we're later in the cycle, so investors are very sensitive to anything that might signal that we're headed for a recession. I would say that we agree. We do not see any of the signals out there that we're headed toward an end to this cycle, so we're heading into 2019 quite bullish.
Do you believe that the Fed has already done, for the doves, has already done enough damage to take a significant share out of GDP for 19?
I think the Fed is moving along. It's moving along its projected path. They're being very pragmatic, very data-driven. We do expect a hike at the December meeting, and we expect 2 more coming next year. And I think when you look at how tight the labor market is, I think when you look at the strength of U.S. consumer, I think the Fed is moving appropriately. I think the key thing to keep in mind, though, is that given where we are with inflation, with the environment being pretty benign, the Fed is going to continue to be able to be flexible, and I think this is key, and I think this will be a positive for equity markets going into next year.
I mean, the Fed is such a debate right now, and it really could go either way, because we got inflation numbers today that showed the cost of living was unchanged, and actually inflation remains pretty subdued, but a lot of that was gas prices coming down, offsetting some of the higher prices in rent. So what does Powell do with that in the shadow of President Trump saying it's going to be foolish to raise rates next week?
I often say that oil's in a lot of things, but labor is in everything, and 9 years into this expansion, falling unemployment, we still have tame and very well contained unit labor costs. Wages are going up thanks to productivity, but there's really no broad-based acceleration in inflation. So we still think the Fed should hike in December, but we think the Fed's only doing 2, maybe 3 at most hikes in 2019, and then done.
Laura, do you touch EM or Europe?
So we take a diversified position in global equities, so we do see that there are opportunities internationally, but driven by 2 different things. So in the US, we have more of a strength in the fundamental environment, whereas abroad, what we see is that valuations are undemanding, and we still have, across the board, a pretty accommodative monetary policy and a lot of a lot of countries around the world. So I would say overall, yes, we do see opportunities in Europe and EM as well.
So quick question, because you just threw the rate hike out there, David. If the Fed doesn't, for some reason, hike next week, goes against market expectations and your own, how would the market take that?
I think the market's already woken the Fed up to the fact that interest rates don't need to go much higher from here, given the inflation backdrop, and taken them off the perception of them hiking automatically on a quarterly basis. I think markets are going to rally into year end, so I think the Fed should feel comfortable with the December hike.
But what if they don't, for some reason?
I think that would
Wouldn't it look like they're just caving to the president's pressure?
Yeah, but in our view, markets are going to be heading upward. The Fed should be hiking, but they need to communicate that they should not be hiking. I want them to be blunt. There's no need for a March hike. They can wait.